and vegetables. So that is also a trade in terms of layman language, and this is also a trade which we do buy and sell, right? So there are a couple of basic points that first we need to know, right? What about the basics of stock market, right? First is like our motive, right? We want to trade or we want to invest, right? But our main motive will be to earn profits, right? Or to earn passive income. So there are two kinds of people in stock market. One who are looking to earn passive income, right? And other one is like profits for long term, right?
Yes, sir.
Right. So there are two ways you can do it: passive income and profits, right? So passive income is a kind of thing many people are doing for intraday, like same day they want to earn some money, some small profit or something like that. That comes under passive income. Or they want to earn some profit within 1 week's time or 1 month's time or something like that. That will come as a part of passive income because they have a capital and they want to trade based on that. They will earn some profits. That is also a part of profit, but that comes under passive income for them because their full-time job is to do trading only, right? Like me, I'm not working, right? My job is full-time in the stock market only. So for me, it is a kind of passive income and profits also, right? Profits is like people keep it for long term, right? 1 year, 2 years, 3 years, 5 years, like that, right? They want to invest it for a very, very long term to create wealth. So that is called as profits. But these two statements can be a common for a specific trader also, right? Because what I have done is that, let's say I have a capital of 50 lakhs. So what I will do, I will keep 25 lakhs to earn passive income, and remaining 25 lakhs I will keep it for long term so that I can create wealth in long term, right? For 2 years, 3 years, 5 years, 10 years, like that. So this is how many people do the planning in stock market, right? Second use case is like, let's say there's a trader who is having only 2 lakh of capital, right? So they mostly focus on the passive income part only because their capital is less, right? So with 2 lakh capital, they will do they will earn passive income for a couple of years, like 4 years, 5 years, and then once they create a good wealth, then they can split their capital in long term and short term, like that, right?
So for a shorter amount, we need to do passive income, and when you have a large capital, we could opt for profit.
Go for wealth creations, right?
Okay.
So this is our investment motive, whether you want passive income to earn passive income or you want to create wealth, right? Some people who are having 1 crore capital, they may not be looking for like passive income. They may not want to do intraday, or they may not want to do for 1 day or 2 days, right? They may want to create their wealth for long term, right? They want 1 crore to become 5 crores or 10 crores, like in long term. So that is why they may opt for wealth creation. So that you have to decide your investment motive. What is your investment motive? What do you want to do in stock market? You want to go for a passive income thing, or you want to go for a wealth creation, right? So most of the people who are working, right, so they want to go for wealth creation only because they are already earning from somewhere else, right? So that is called as active income, from where they are earning, like they are doing job or they have some other business, right? That is basically a active income. So they will take out some money from active income and put it in stock market, right? So this is clear. Any doubt in this active and passive part?
No, sir. So currently, if I have to start investing, I have to do passive income only. I mean, not now, but
Yeah, you can go for passive income. Let's say you are a student, right? Let's say you are, uh, you may be studying for the in some college or something like that, right? So you can also go for passive income because you may have 2 to 5 lakhs of rupees to do, right?
yes.
Investment. So that is why you should go for passive income. And once your capital becomes like 10 to 15 lakhs, then you split your capital accordingly, right? You can keep 5 lakhs in passive income, and remaining 10 lakhs you can do for long term investments, right? Fine, correct.
Okay.
This when to start investing. So there is no age limit to start the investing. To you can start at any age. I have some students who have started from seventh, eighth standard also. So they are learning stock market because they want to start investing now. So that is actually the best time to start it, because for long term investment, to grow your wealth, you need at least 15 to 20 years. Your money should be invested minimum 15 to 20 years to create a lot of wealth. You might have heard about many investors like Rakesh Jhunjhunwala, Warren
Yes, sir.
Buffett, like that. So these guys have created wealth in long terms only, right? 20 years, 30 years, 50 years, like that, right?
Okay.
So,
So this is the
so
right time.
this is the right time. But if some people have not started at earlier age, they can start at 35, 40 also. Whatever time you are starting, that is actually the best time to do it. I started at the age of like 26 or 27. So I still feel that I should have started earlier. But
Yes.
I started at 26, 27 age. But at that time, I was not like full time investor. I used to invest very little money, right? Like 5,000 per month, like that. So I still regret that I should have invested long money at that time every month, because at that time I was working, right. I should have
Yes.
invested like monthly at least 30 to 40% of my salary. So I still regret that. So I don't want others to regret. So that is why I always say that you should start early.
Okay. Okay.
E- Even to my son also, I always say that once you start earning, you should start from that day only. You should start doing the investments. Right. So where to invest? Where to invest? You have a lot of things where you can invest, right? So first thing is like you are earning money, right? And then you have to
Yes.
save, saving, then comes investing. So this is a process actually, right? First you have to earn
Yes.
money, then you have to save money, then only you can do a investments, right? So where to invest? We have lot of options to invest. Like you can invest in real estate.
Okay.
One second, I have a slide. I will show you this slide. Okay. So there are two types of opportunities wherein we can do it. One is physical assets and other one is financial assets, right? So physical assets are called as like real estate, gold, silver, jewelry, commodity. Those things comes as a part of physical assets. But nowadays these assets are available in terms of financial assets also. Gold, silver, you can even invest in terms of financial assets. We have some kind of funds and bonds like that. Right. Earlier, when you see like long back, 10, 15 years back, at that time we didn't have the gold funds or gold bonds. At that time, people used to invest only in physical assets, like they used to buy only the physical gold or physical silver, right? So, but nowadays we have these things available in terms of financial assets also. Even real estate also, we have some kind of funds which are available in stock market, which directly invest in the real estate. So if you invest in those funds, your money will indirectly go to the real estate only, right? Because if you want to buy a physical real estate, you need at least 25 lakhs, minimum 25 lakhs to invest in the real estate, right? Minimum 25 lakhs. Because if you want to purchase a small land outside your city or somewhere in the outskirts, you need minimum 25 lakhs, right? But in
Yes.
funds, you can start with an investment of even 1,000, and they will indirectly invest in real estate.
Okay. Once the capital becomes big enough, they will.
Yes. So here, what you can do is that you can buy every month like that, or you can buy once in a week. So it depends on your requirement, and it depends on the availability of your money. You can invest whatever you like and whenever you want. Right? So there also your money will grow like 10 to 12% of return, like that. Even in the real estate also, it can grow in the same speed, 7 to 9%, right?
Yes.
But in
So that
real
is money. Sir,
But in real
is
estate,
that
maybe a risky,
that
right?
percentage is monthly or
This is like minimum 10 to 12% per year I'm talking about. And this is 7
okay,
to 9% per year I'm talking. See,
okay,
every time whenever we are calculating the return, it is per year. It is not like per month. The return always
okay,
comes in per year. Right?
okay,
So if you see a return in 5 years, right, we call it as a CAGR, which is called as compounded annual growth rate.
okay,
Right. If you say for an example, if there is a fund who is giving you a CAGR of 25% in 5 years, right? So that means that that fund is paying you 25% return every year for 5 years.
okay.
Every year for
25%
5 years.
per year, 25%.
Yeah, if you calculate it, it will be like 25% per year for 5 years. So that is why we call it as a CAGR, compounded annual growth rate. So this is a term that we use in like in stock market returns or fixed returns or from bond side CAGR. You might have heard about it. I don't know, but you might have heard about it. CAGR. Sometimes they write 15% CAGR, right? Sometimes they write 20% CAGR. That means that they have given a return of 20% per year for continuous 4 years, 5 years, or 10 years like that. Right. Fine. So these are the physical assets you can invest, and then we have financial assets. Financial assets like fixed deposits. These are the financial assets. RD, regarding deposits, right? Post office
Yes,
schemes,
yeah,
right? Shares, bonds, PPF, mutual funds. All these comes under the financial assets, right? So the return may vary depending on the type of financial asset, right? In FD, the return is different, 6 to 7% per year. RD also it is I think the same, only 6 to 7% per year. Post office also is giving the similar kind of return. Even in PPF also I think it is similar. I think 7% only, right?
yeah,
We have an option of Sukanya Samriddhi, right? You might have heard about it from
yeah.
from our government of India. That is only for the girls, and here they are giving 8.5% of return per year. Right.
Okay.
Okay, so this
8.5%. Suppose if you are investing some amount, after 1 year it will increase by 8.5%.
yes. Let's say I have invested 1 lakh. Okay, so after
Okay.
1 year, if you calculate in a simple interest will be like 8.5% of 1 lakh, right? So whatever amount you get, you will get around 8,500, right? So now your money will become 1 lakh 8,500.
Okay.
So this is a simple interest. But if you want to invest this for long term, like 2 years, 3 years, then it will get compounded every year. So now from second year, the interest will count on this money.
Okay.
So that is called as compound interest. So all the financial assets will give you the compound interest. Will follow the compound interest. No simple interest is calculated here. They will always follow the compound interest. Means whatever return you are getting in 1 year, they will put a interest rate on that new amount. Right. So this is called as compounding interest. Is this clear? Any doubt in this? Compounding and simple interest?
So shares we can do it in both physical asset also, financial asset also.
No, shares we can't do in physical. Earlier they used to do in physical form, like long back, 25, 30 years back. At that time they didn't have an option of like this thing. Now they are only available in demat account. We call it as a demat account.
Okay.
So like we put money in savings account, right?
Yes, sir.
So similarly, demat account is used to store stocks,
Okay.
stocks or bonds or mutual funds like that, right?
Okay. Demat.
Right. So they are the financial asset, but that has to be stored in soft form, not like physical asset or something like that. Right. So these gold fund also is a part of. You can store in demat account, right? Gold fund or silver fund and all the funds which are related to real estate. Whatever thing is not physical that you can store in demat account. Right. Right. FD and RD will be stored in your savings account, but FD and RD and these things will be stored in your bank. It's a kind of bank only. They have a separate concept, right? FD. So it's a kind of bank only. So they are not stored in demat. Only stocks, bonds, and these funds are stored in demat account, right? So once you are 18 plus years, you can get a demat account opened in the bank. There are many brokers available like Kotak, SBI, HDFC, ICICI, right? You can get it open, right? Because if you want to invest, you need a demat account. Without demat account, you cannot invest in stocks. Okay. And so you understood the difference between physical assets and financial assets.
Yes, sir.
It's clear, right? So these are the investment opportunities the people can choose to invest their money, right? So there are three golden rules we have to follow for investing, right? Invest first. We have to invest early, right? Invest regularly and invest for long, right?
Okay,
So
sir.
this is for investment, not for passive income. Passive income you have to do it for short term only, right? Because you have a limited money to trade, right? You have a limited money of 2 lakhs, so you should keep on rotating the money, right? Fine, is clear.
Yes, sir. Yes.
So before investing in a market, what things we should know? So before investing in a market, one must know about these following things, right? Share. So do you know what is a share or a stock? Any idea?
Share is the percentage equity which you hold of that company or
Yeah,
that product.
yeah. So they have certain percentage of equity, like let's say X company has 100% of equity. So what they are going to do, they will send only 70% to public, and remaining 30% they will keep it